Hello everyone, how are you? This is Kay, good to see you again. So this is a video, not the live stream, but today on this video, I would like to explain first my trade performance in the month of April, and also I would like to introduce one of my trades in the month of April so that you exactly know how I select a pair and how I check the markets in different time frames, multiple time frames, and my entry and exit and so on. So let me switch screen. And today, so first of all, let me show you my trade performance in the month of April. And as every month, I do this video, my monthly performance video. And so here it is. This is Excel spreadsheet I create myself to track my records. And in the month of April, in terms of my performance, win rate was 64.29%, which is relatively better than usual win rate, because usually my win rate is about 30 to 40%. So in that sense, my win rate was great. And also the most important number here is this PF, profit factor. Profit factor is calculated by the gross profit divided by the gross loss. So this simply means that this is the risk and the reward ratio in terms of money value. And I got 6.61. So that means every, let's say, $100 spend, I get the return of $661 in return, in average, throughout the month of April. So this is risk-reward ratio 1 to 6.61 was my average performance. So this was a great achievement for myself. And as a result, the return was 8.9%. So my target is 10% per month, and this is close to 10%. So regardless of the condition of the markets being a bit choppy in the month of April, I was able to capture some nice trends on JPY pair. And today on this video, I would like to introduce how I entered one of the JPY pair trades. So that was my overall monthly performance this month. And as I say always, when you look at the graph of this profit and losses, you need to draw this N wave, bullish N wave. This is the ideal graph that you want to form whenever you look back your performance. If the graph still looks like this is gamble. Like one of your trades, you make huge profit, and the next trade you lose very big, and on the next trade you get a very big profit. So this is very choppy, like a range market, if this is one of the markets. But if your performance is like this, then this means it's too risky. You may lose below account on the next trade. So this is not an ideal pattern for you to draw on the graph. Or if you have N waves, but if you have this reverse N wave, that means the more you trade, the more you lose. So this is also not a good graph to have if you want to keep trading in the long term. So try to draw the N wave graph. Bullish N wave graph is basically my idea of my strategy. And that's why this is one of the reasons why I became a trend follower. So coming back to this performance in the month of April, I took the trades of total 7 trades. And as you may know already, I take 2 positions in one trade. So I got a total of 14 positions and 7 trades. And the best trade in the month of April was Pound JPY, which I took on the 24th of April, and I got 132 pips of profit and 60 pips of profit. So in total, I got 192 pips of profit. So that was my biggest profit in the month of April. And the drawdowns are kept very small. My biggest drawdown was on the 9th of April on Euro JPY, which I got 18 pips times 2 loss. So that was 0.65% times 2 drawdown, which is quite small in my performance. So this is the most important in terms of my trader philosophy is to lose small and win big. If losses do happen and losses are inevitable. So try not to avoid the losses, but how to deal with the losses is important. And you can do so by the risk management. So because the more you get the losses, the more it becomes difficult to win the profits overall. So the easiest way to have the long-term profits and easiest way also to have this better PF, risk-reward ratio, is to minimize the drawdowns as much as possible. And that strategy is incorporated in my system, and that's why I'm able to achieve this performance every month. So regarding my trade strategy, I know some of you are new to my YouTube, so let me just quickly introduce my strategy. So basically, backbone of my strategy is time efficiency and multiple time frame analysis and stop loss break even and profit trading strategy and risk management, including lot size, drawdown, and profit factor, and how to write a correct trading journal. So these are all very important pillars of my strategy. KTS is K's trading strategy, and these are all important components of my strategy as a trend follower. So, so basically, whenever I take trades, I do check charts in multiple time frames, and so when I trade Forex markets, I take daily and 4-hour time frames as bigger time frame, and 1 hour M30 to be middle time frame, and M5, M15 to be lower time frame, which is my entry timings. So today I will be showing my trade on GBP/JPY, which I took on the 24th of April, and I will show you how I took 132 pips and 60 pips in 2 positions. And in my communities in KTS Academy and also GTS classes, I share all my trades. But in this YouTube, let me introduce this GJ trade in the month of April as one of the examples of my trades. So whenever I take entries and exits, and also whenever I move my stop losses, I take screenshots. So, and here are the screenshots. Let me see. Hold on, just. Okay, yeah, here is. So here is the GBP/JPY, and this is the screenshot when I was about to enter trade. So this is a daily time frame, and as a trend follower, the market needs to be in a trend. So this is to me a trend. Or some of you may think that this is still range until it breaks the resistance. But this is one of the cases where I enter trade before the breakout happens, so that once the breakout really happens, then the market takes off bullish towards my direction. And I do read the potential breakout by Ichimoku Kinko Hyo. In this case, Ichimoku Kinko Hyo, the Kumo is bullish, and the Kijun-sen, Tenkan-sen are up and bullish, and Chikou span is now above the candles. Technically, Chikou span is still touching the tip of the wick on this candle, but I can see that momentum-wise, this is bullish. I can see that also that there was in candlestick patterns that there was this inside bar breakout and doji reverse, and lows are higher and highs are the same level. And this is called the ascending P wave structure. So there are more buyers and sellers in the market from these candlestick patterns, and also Ichimoku Kumo and Kijun-sen, Tenkan-sen angles. So this gave me enough confidence that the market goes up from here. So that's one of the bigger pictures of decided why I took this trade. And also, after checking the daily time frame, coming back to this, so it was a daily time frame to be bullish. And once I confirm the daily time frame to be bullish, then I check either 1 hour or M30 to be trending or not. And in that, whenever I check entries, I check the lower time frames, but before that, I check what I call the middle time frames. So when I was about to enter trade, I checked 1 hour, and 1 hour looked like this. So 1 hour also was bullish to me because it also, the Kumo was up. And not only that the Kumo was up, but also Kumo thickness. This is really important. That the Kumo thickness is getting bigger, and that means the buying positions are building up. So that means there is a potential breakout newly on the daily resistance. And plus, Kijun-sen, Tenkan-sen are both up, and Chikou span was above the candles too. So this is a nice bullish trend. Okay, and so here is an entry screenshot. Hold on. So here's entry. So when I entered the trade, it was like this. So this is the 5-minute time frame. This is M5. And on the 5-minute chart, I don't use Ichimoku, but instead I use different tools. I basically enter the market based on what I call the confirmations, entry confirmations or entry edges. So, and I combine multiple entry edges, and in this example, I combined first the gold cross on stochastic. These two lines are called stochastic. I enter trade based on this gold cross stochastic. And also the price is going up, and this is called the band walking, the Bollinger Bands. The prices are division 1, 2, it's called bullish and Bollinger Band walking. That's the second entry confirmation. And plus, I saw that as I drew, there was a trend line bounce, 1, 2, and 3, and 4 touches. So that means in the future, even if the price goes down, most likely it will be supported by the trend line and continues bullish. So that gave me another confidence, another confirmation that the market most likely goes bullish from here based on this 5-minute time frame. And plus also, I also see that there was an inside bar. So here's the inside bar and the breakouts. So like this, in this particular situation, I have so many confirmations, so many reasons to enter trade. And plus on this screenshot, it doesn't show, but this is JPY pair, and I mentioned that a couple of days ago, I did the live stream about Tokyo box breakout. And in this screenshot, although it doesn't show here, the price was above the Tokyo box, so that it was also giving me even more confidence that the market goes bullish towards my direction whenever I enter trades buy right now. So like this, first of all, I check the higher time frames and what I call the middle time frame also to confirm the trend. That's the basic primary condition that I will be entering the trade. If one of these time frames are flat or range, then I never enter trade. And that's easily done by Ichimoku in higher and the mid time frames. And after I confirm the trending market, that's when I go down to the lower time frame and look for an entry edge so that I don't jump in the market. Although the market may be bullish right now, if you look at the lower time frames, it may be tracing, it may be ranging, it may be choppy, or you don't have any entry confirmations. In that case, the markets may be very choppy, or it may not go your direction after you enter the trade. So again, like I mentioned before, time efficiency is one of the backbones of my strategy. So I want the market to go towards my direction right after I enter the trade, and so that I can cut down the time to monitor the chart until the price goes towards my direction. So sometimes, after the enter trades, the price goes sideways and you don't really make any profits, and for the next 3-4 hours you just keep holding the trades. It may happen too, but it's not time efficient. I want the price to go towards my direction soon after I enter the trade, and that's also a reason why I built my strategy like this. So anyways, coming back to this entry, so this was my entry position, and my stop loss was 35 pips down. So this was my stop loss, and this is my entry buy. And whenever I enter trade, I don't expect the price to go towards my direction. I mean, I do monitor the chart, but I don't always expect the price to go towards my direction, because it can retrace also at the same time. So in case if the market retraces, then I have to know when exactly I have to exit my trade. Would that be here or here or here or here or here, or the stop loss? I have to know exactly when to close my trade with a small drawdown in case if the price goes against me after my entry. So this blue line here, 192.80, this is the potential exit timing of mine. So that means if the price reaches here, then it depends on the market condition, most likely I would exit my trade. So I mark roughly where I exit my trade with a small drawdown, so that it protects me psychologically in terms of when to exit my trade. So this is also very important mindset, that every time you enter trades, you expect the price goes toward my direction, but at the same time you have to also incorporate the scenario that if the price goes against you, then what to do, when to exit your trade or what to do with it. So scenario have to be always in both directions. So and also, as you may know already, I take 2% to my stop loss. So here is my entry buy, and this is my stop loss, and I take 2% of how much I have in my Forex account. So that if the market touches the stop loss, then I lose 2%. So 2% is my max drawdown I can accept per trade. And I take 2 positions and 2 stop losses. And total is 2% drawdown. So anyways, that was my entry on GJ. And also next is the break-even timing, and I trail the profits. So after I enter trade, the market went towards my direction. So again, this was my entry buy. And this is my entry buy here. And this is when I trail the profits. Initially, the market went towards my direction and it retraced a little bit, but now it's taken off this way. So this is when I move one of the stop losses to here, the most recent pushback. In this way, I fix the profit of 23 pips running, 23 pips fix. So that means even if the market goes bearish, I still take profit of 23 pips, right? And also I have 2 stop losses. So second stop loss, I place it above my buy position. So and this is what I call the break-even line. So that even if the market goes backwards and touch the break-even, I don't lose in this case. So in this particular situation, it's either win or more win, because I already fixed 23 pips of profit. So even if the price goes down in the next 5-10 minutes, any surprise news happens and it shoots all the way down, although this kind of situation happens, I still fix 23 pips of profit and break even. But the chances are the price is still bullish and the trend is still bullish. In that case, I don't exit my trade manually because there is still a good chance that the market goes bullish towards my direction. But I secure my profits along the way up. And this is also the part of the risk management, to really trail the profits in this way manually. So this is how I trail my profit, and eventually the market went up all the way. And this is this is okay, hold on. Yeah, this is my entry buy again. And the market has gone all the way up next day. And this is when I came back the chart. And since I see the last pushback being here, and technically speaking, there was also like a W bottom neckline breakout here also, I found a strong support line here at 194.33. So I moved one of my stop losses below the W bottom here and fixing 132 pips of profit. And second stop loss, I don't keep it on the break even because it has all the way gone up. So I fix 59 pips of profit, which is down here on this below this 2 pin bars, because I can also see that there is a strong support in this area. So that this is also my win or more win trade. And since bullish trend still continues, I was still expecting the price to go up this way. And although the market is now retracing, this is again the 5-minute time frame. The market seems to be a bit retracing. If higher time frame is bullish, this retracement can be turning to be bullish again. Just like here or here, retracements do happen on the M5, but as long as it's bullish, there's a good chance that the price goes up this way. So in this condition, I keep holding my trade. Yeah, so that's how I continue to trail the profits, and this requires patience to do so. Whenever you see the price goes up and towards your way, let's say 50 pips or 40 pips, then you may tend to fix a profit and take profit there. But if you keep doing that, there's no way that you are able to fix these big profits. But instead, be patient on your holding the positions and try to follow the trend as long as possible is my strategy, is my mindset. So I don't fix my positions so easily. Once I'm in the trade and once I'm in the profit, then I keep holding my trades until the price hit the stop losses or until the uptrend, bullish trend is over in higher time frames. And eventually after this, I stayed away from the market and the market actually went down all the way. And these are the timings I fixed a profit, 132 and 59 profits. And that was how I took the profits on GBP JPY. And this was one of my best trades in the month of April. But today, I just wanted to show you my trade example like this. And I think this is something new to you because this is the strategy I built on myself, by myself, and based on Ichimoku in higher time frames and entry and exit in the lower time frames like this. But today, I just wanted to mention that the most important is to become patient in terms of the trend follow. Once you're in a trade, then try to hold as long as possible, and so that you can ride on the big trends along the way up or down. So looks like the markets are trending very actively so far. I think in the month of May, I'm expecting some nice new trends. Looks like JPY pairs are retracing now, but we may see some other trending pairs on the month of May. So whenever I see trends, whenever I find the trending markets, I simply look for the trading opportunities and enter trade and keep holding my trade. So hopefully you can apply the same strategy and become a trend follower and become a non-losing trader like myself by managing the risk and also psychology on your trades. So thank you very much for watching. If you liked it, please press the like button, and if you can please subscribe, that would be great too. So until I see you next time, please stay healthy, stay safe, and stay gold. Bye for now. またね. Thank you very much.